Marriott, speaking of, shares spiking after the hotel giant beat on RevPAR, which is revenue per available rooms, or the industry metric, and issued solid 2026 guidance, though it did miss on earnings expectations. Joining us now, first on CNBC, is Marriott CEO Tony Capuano. Tony, good morning. Welcome.
Hi, Sarah. Good to see you. Thanks for having me.
So I guess that, the street is sort of celebrating a lot in here. The RevPAR numbers, I think the pipeline, the loyalty. How do you describe the environment right now?
I think to state the obvious, there are some economic headwinds, there's some uncertainty, but we continue to see the consumer prioritize spending on travel and experiences, and that really reveals itself in the results that we reported this morning. I heard Carl's comments a moment ago about the performance of some of the luxury groups, and I think luxury was a real highlight for us in the quarter and the year, with luxury RevPAR up globally over 6%.
What about in the U.S., where RevPAR actually declined slightly during the quarter? Is it government shutdown related? What's the story there?
Yeah, we mentioned this on the call. Had the government shutdown impact not happened, we would have been up about a point in the U.S. and Canada. I would say the U.S. business is sort of steady as she goes. We've guided to similar RevPAR volumes in 26, absent the impact of the government shutdown, which had fairly significant impact for about 43 days.
So is it a tale of two travelers now? Is it luxury versus everybody else?
Well, I mean, the K-shaped economy is certainly impacting the travel vertical. Thankfully, we've got about 10% of our global inventory and 10% of our global pipeline in the luxury tier, so we're seeing real benefit from that. But just 3 years ago, we started pushing into the mid-scale space, and we're seeing some real benefit from that more thrifty consumer as well.
Tony, there's been a lot of ink spilled about international inbound into the U.S. Negative last year. Disney referenced it the other day, looking for some headwinds at domestic parks. Are you seeing it? And if you are, like, what are the implications for things like the World Cup?
Yeah, thank you, Carl. It's an interesting question. We are seeing inbound international to the U.S. down. But if you look on a global basis, our cross-border travel across the entirety of the portfolio is ahead of where we were in 2019. This weekend, I had a chance to spend some time with the senior leadership of FIFA, and it was all anecdotal, but the data they shared about the volume of ticket requests and the bookings they've seen, I think bodes quite well for what we'll see through the World Cup.
What about business spending, Tony? What do you see in terms of sentiment and appetite for business travel, events, which makes up such a big part of the business?
Yeah, I think of the three segments we compete in, Sarah, leisure was the clear leader in the quarter and for the year. Group followed that. And then we saw flattish business in business transient. If you look at the negotiations we're having for special corporate business, we expect to see rates up low to mid single digits, which I think is encouraging. But business transient is the softest of the three segments we compete in.